Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me this afternoon, we have Xing Xin, CEO of Upfort, and Nir Perry, CEO of Cyberwrite, to discuss quantifying and measuring cybersecurity risk and insurance measures businesses of all sizes should assess. Gentlemen, it's great to have you with us. Welcome to Trade Talks, and let's learn more about your respective companies. Xing, tell us more about Upfort.
Thanks for having me, Jill. Upfort is a software platform designed to make cyber risks simple to manage and insure. Our AI-powered cybersecurity suite enables any business, no matter how small, to deploy robust, multi-layered protection against cybercrime. And additionally, our proprietary tools and data help insurers and brokers underwrite cyber policies more efficiently and accurately. So our goal is simple: to democratize cyber resilience, ensuring every business, no matter its size, can withstand and recover from cyber incidents.
All right, and you're Cyberwrite.
Cyberwrite provides cyber insurance risk analytics to insurance companies, reinsurance companies, and brokers worldwide. We basically collect data on over 300 million companies worldwide, and we provide benchmarking and risk analytics to help boards and business owners understand how much cyber insurance they actually need to acquire, what is the probability of a breach, and how they can actually mitigate it. This is being used by insurance companies to underwrite cyber insurance, as well as by brokers to explain to their customers why having cyber insurance is so important and help them quantify the risk in a way that makes sense for their business.
All right, let's talk more about quantifying that risk. Xing, what are the most common types of attacks, and how do you quantify the damage that's done to a company?
Yeah, absolutely. I mean, it feels like you can't go a day without hearing about ransomware, which is at a record high right now. And frankly, it's a serious problem for businesses large and small that's rapidly growing. We see it roughly about maybe a quarter of cyber insurance claims are just tied to ransomware itself. But what I find really interesting is that when you look at another half of claims, it's actually due to financial fraud when it's tied to phishing and business email compromise. So basically, we as humans, we're naturally prone to trusting others. And so many of these cybersecurity incidents are actually just when a cyber criminal impersonates a vendor or an executive and tricks someone into sending something that they shouldn't.
Yeah. And when you think about a quantitative approach to measuring and ensuring cyber risk, is there a way to quantify that, whether it's damage to a revenue line, reputational damage, which to me seems intangible? How, from a more qualitative perspective, are you able to quantify this?
Sure. So the world is moving more and more into quantitative versus qualitative, which has been used for the past 20 years. And when we look at the amount of data about the historical claims that exist in order to make predictions, it's just insufficient. And so what insurance companies are using Cyberwrite, for example, is in order to predict based on breach information that we have collected for the past 10 years, and basically provide insights based on that by using what happened to companies in the past and looking at the attack vectors and at the different attack types that have been implemented by cyber criminals organizations. It's basically possible to predict what is going to be the risk level for a certain organization in the future. And just adding on what Xing has said, I couldn't agree more. We see more and more companies with data in the dark web and more stealers installed on employees of corporate customers, where basically those stealers share passwords online of employees. They share their email address of the company, share email address of their personal account. And this is creating a great exposure, not only to the corporate itself, but also to third parties working in that environment. And by being able to look at those companies and collect all this data and provide insightful analytics on how they can reduce the risk, it would eventually result in less cyber damages and less financial damages caused to corporates and small and medium-sized businesses alike.
Mm-hmm. And Xing, from your perspective, what are the greatest obstacles businesses and organizations face today in terms of assessing holistic cyber insurance and coverage?
Yeah, honestly, I feel like it's such a multifaceted problem, but three key things really come to mind for me. I mean, first is we talked a little bit about cybersecurity is such a human trust challenge. So when you think about the typical person and how likely they might be to get tricked into clicking something, opening something, sending something, that greatly increases the likelihood if you do not have the continuous training and tools in place to really make sure that is secure. But also there's a big gap kind of in the market. We feel like so many businesses, the 99%, are underserved because so many solutions are built for the enterprise as with a high total cost of ownership versus what the 99% of businesses can afford. And just keeping up with emerging threats and knowing what should I focus on first, right? And when you kind of put it into quantification and really looking at getting the right insurance coverage, it's, well, can you show evidence that you are taking these proactive measures? Are you able to prove and understand your kind of risk, and also to continuously improve it on an ongoing basis throughout the life cycle of the policy rather than just at a one snapshot point in time?
Yeah, I mean, especially for public companies too. I mean, it's an SEC requirement to report on, cyber breaches and the standards that were put into place. So what are the most important tools for businesses to utilize and mitigate cyber risk, Nir?
Well, eventually, the use of big data and the use of advanced analytics is critical. Today, what we see is that cyber criminals are making advanced usage of AI in order to fool employees into providing their corporate credentials to cyber criminals to eventually gain access to critical data. And so as criminals are moving into utilizing AI more and more in their social engineering attacks and in other attacks, it's really critical for the corporates to also use AI in order to assess the risk, in order to quantify the risk. Corporates can't be left behind. I think board members need to accept that AI is now part of day-to-day life in their operations and cybersecurity in particular, and making use with the advanced analytics tools to quantify the risk is critical. For example, if you ask yourself, okay, I only have a certain amount of budget and I need to make a decision, do I buy product X or do I buy product Y? The decision making should be based on which product would reduce the probability and the financial impact of a breach in the most comprehensive manner. And this is something that about 10 years ago or even 5 years ago was very hard to achieve. But today, using advanced analytics, corporates are able to basically insert all of their information about their cyber risks and their cyber protection into software and get an assessment of what is the eventual value they're getting and the ROI they're getting on a certain investment.
Yeah, I completely agree with Nir, and I feel like one of the things that understanding your risk is such an important foundation in order to make it better. One of the things that I see when it comes to cyber attacks, obviously these attacks always evolve, but the majority of businesses out there, they're not facing advanced attacks from nation state actors, right? And so cyber criminals are financially motivated. So when you think about it from that lens, it can actually simplify the problem a little bit. Not to say it becomes a simple problem, but cyber criminals rely on cost-effective entry points. So when you're thinking about the most important tools to mitigate risk, well, think about what are the most cost-effective ways for a cyber criminal to get in, whether that's exploiting one of the systems that you don't have up to date, or exploiting tricking an employee through phishing, or actually making sure that you have your configuration set correctly on certain things. So there's a lot of low-hanging fruit that businesses can make sure to do, including, for example, securing their accounts with multi-factor authentication that can make a dramatic impact in reducing their risk.
And adding on what Xing just said, the low-hanging fruits, eventually cyber criminals are looking for the low-hanging fruits for the best ROI for their investment in cyber attacks. And so when organizations are actually assessing their cyber risk, one of the key words that we have to remember is benchmarking. You want to be able to benchmark your own security and your own risk posture to other organizations in the same geography, in the same industry, and in the same size. Obviously, if you're a large telco, you don't want to compare your risk to a small legal firm or an accountant. And talking about the small legal firm and accountants, there are hundreds of thousands of SMBs at cyber risk, whether it's just by cyber criminals or by state actors who are looking to gain data on American citizens, gaining their personal information. And this is something that everybody should be concerned about. And when taking a look into the added value of cyber insurance, when a small and medium-sized organization is having a breach or getting hacked, they don't know who to call. They don't know what to do. And so having a cyber insurance policy available for them in a way that they can call immediately the insurance company and get a list of experts they can call and have assistance within 30 minutes is something critical to be able to mitigate the effects. And even if it's a ransomware or if it's a financial fraud, those experts that come through the insurance company are able to help you mitigate your cyber attack. So I think as most corporates already have cyber insurance, starting already from about 10, 15 years ago, many SMBs still do not have cyber insurance, and they're confused. They think that their business owner policy is going to provide them with the cyber coverage, but in most cases, it actually doesn't. And so it's really critical for business owners to ask their insurance broker to help them quantify the risk and also to help them understand how much cyber insurance they need. It could be that your type of business, you need $1 million, could be that you need $10 million. So it's really critical also in that case to use tools that can help you. And those tools exist. They are in the market, and brokers have access to them to help them understand how much cyber insurance they actually need to purchase to be safe in case of a breach.
See, and I think that's an important conversation that we're having right now, because part of the challenge is being able, whether it's the CISO or someone else within management or under the CFO function, to be able to communicate these needs in a way that the board can understand. In fact, we're starting to see, in terms of composition of the board, more cybersecurity experts holding those seats. But I think, to both of your points, being able, not just putting money towards a piece of the technology stack without being able to show either the return on investment or exactly quantifying what you're mitigating. But I think another part of the challenge too, Xing, is when you think about AI, companies are rushing to, tell their AI story, to develop revenue lines. They want to be first to go to market, understandably so. But you also have to, weigh in the risk from a cybersecurity perspective and data privacy perspective about these new tools that you're implementing. And that takes time. And, there's a balancing act there that companies have to manage.
Yeah, 100%, Jill. And frankly, we're in such uncharted territory when it feels like every month or every week that goes by, there's such rapid change within the ecosystem with both AI capabilities, but also whether that's for good, for bad, and the exposures that it increases as folks increasingly utilize it and incorporate it as part of their operation and products. And, we see that actually play out on the cyber criminal side too. They're utilizing dark AI in order to more quickly create exploits to increase the believability of phishing and impersonation and different attacks. So it's such a compounded problem in which, it creates exposure for the company when they utilize it themselves, but also bad actors are rapidly accelerating their attacks because of the use of the technology themselves.
Yeah, it's just so fascinating to follow, and interesting to your point that, and this is the case with technology in general, it just evolves much quicker with each iteration. And then so do the cybersecurity experts as well. Nir, so when you're thinking about how to assess the amount of cybersecurity insurance that you need, is that based on revenue? Is that based on potential exposure you have? How, I don't know if there's actuaries in cybersecurity, that or something along that line, but how do you determine what that looks like?
Sure.
Absolutely.
So obviously there are actuaries in cyber insurance, but also the capability to actually collect data about damages that happened throughout the last 10, 15 years and dismantle this information into pieces of data that actually allow to construct an analysis of a certain risk posture to an organization enables us today to actually bring organizations that predicted a number of a range that they're going to have a damage in case of a cyber breach. And so, for example, you're taking a look into the cost of ransomware, you're taking a look into the cost of downtime, the cost of breach notification, the cost of legal expense, et cetera, but all of this data has to be taken into the context of your industry, into the context of your geography, of course, in what kind of areas are you active, but also taking into consideration your digital landscape of your organization. If you're a big organization online, a small organization, do you have a lot of data? What kind of data do you have? Is it PII, personal identifiable information? Is it medical information? Is it more credit card information? All those factors, a human cannot really make a quick decision and understand them without the use of automated tools and advanced analytics. And I think more than anything, we have enough experience these days to help corporates and to help SMBs to understand that amount, what amount they actually need to be prepared for in a short amount of time, sometimes in a matter of minutes using those tools. And it's really a game changer for many business owners because it's the first time that they actually hear about, oh my God, you can have $500,000 in damages, or you can have $20 million in damages. And they're shocked by the notion that they're actually exposed to that amount of damage due to the information that they're keeping in their servers. And so even for smaller organizations, this is a critical piece of information to have. The use of machine learning and the use of AI has augmented that information. And adding on top of that, it's important to remember that there is a huge asymmetry between the attacker and the defender. The attacker only has to find one hole in the security in order to gain access over one point in time, while the defender has to defend the whole organization across all of time. And so I think that most people agree that it's not a question of if an organization is going to have a cyber breach over time, it's a question of when. And the purpose is obviously to be more secured than your competition and to be as secured as you can in order to postpone that potential incident or a breach for as long as you can.
Yeah, I agree with Nir, and actually building off of the concept, there's another asymmetry in place as well, and in a fast-growing piece in which when you look at the information asymmetry between the folks who are underwriting cyber risk and actually the risk posture of the company, you can only get such level of information from answering some application questions, and an outside-in scan tells you certain parts of the equation, but most of the company's infrastructure from behind the firewall, that's not really accessible from an outside-in risk assessment. So there's naturally a risk, there's an information asymmetry here that I think as we continue down this journey, absolutely, Nir is 100% right. There's much better improvement in terms of the quantification of both the frequency and the cost of different types of cyber incidents. And I think as we evolve as an industry, there's so much more that we can be doing in terms of pumping even more data, including behind the firewall data, into the ecosystem so we can better identify correlation and give people even better understanding around the risks and the cost of the risk.
Appreciate the insight, gentlemen. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.
Thank you, Jill.